Welcome, everybody, to another episode of the Gold Silver Bitcoin Show. We are more than honored today to be sitting down with Gareth Soloway. You can find up to date thoughts, ideas, action items from Gareth on his Twitter at Gareth Soloway. He's been a trader for more than 20 years. He specializes in technical analysis discipline, which I think is something that we should be speaking more of. Although I know that people on YouTube are looking for the news. Market psychology, crypto trades at verifiedinvestingcrypto.com, stock trades at inthemoneystocks.com. Thank you so much, Gareth, for joining us today.
Oh, it's really my pleasure. Thanks for having me.
Pleasure's all mine. So we have a lot of news in the crypto world, starting with FTX last week. So let's just dig in with starting with that. What is your view on FTX?
Yeah, so I mean, really earth-shattering type stuff going on there. I mean, so many investors losing money, and we're not talking about just small investors. There was big money involved with investments in FTX, and obviously they're going to probably get zero back as well. So I think if there's anything positive to take from this, and this is definitely not a great thing, but the positive would be is that it's going to force the regulators to get some framework out to create transparency. And the biggest thing for crypto is that after FTX, there's no one with big money that is going to come into the crypto sector until there's regulation. So as bad as regulation, as much as we don't want over regulation, we need some sort of kind of framework that creates more transparency. So investors, when you put your money on an exchange, you shouldn't have to worry if it'll vanish tomorrow. That should not even be a thought. The only thing you should be worrying about is your investment in Bitcoin or Ethereum going to go up or down? So I think that's the key. I think in general, this is the beginning of the final leg down in crypto. We're still going to go lower. I have it priced to go maybe down to 9,000, 10,000, but I think this will be the final flush. I think that when we bottom out, it will be a combination of regulation that gets us out, as that will draw big money into the space.
I'm looking at a CNN.com article currently. Collapse FTX owes nearly 3.1 billion to top 50 creditors. Do you think there's a chance that there could be somebody else out there who's bankrupt and we just don't know it yet, which could maybe prolong this bottom?
Yeah, so I do think that there will be more entities that go bankrupt. I'm looking at FTX as being kind of the biggest of them out there. So I think that you'll have a lot of ancillary, companies that are smaller that had investments with FTX. Last week we heard about Genesis and some of these other ones. So I do think that there will be more bankruptcies, but my guess is, and my hope is that FTX was the biggest. And this is kind of, to me, this is the Lehman Brothers event. If you go back to 2008, during the financial crisis, Lehman Brothers went bankrupt. It shook the world of investors, but ultimately it was the beginning of the end. You flushed for about 6 more months in the stock market before putting in an epic bottom. And from that bottom in the stock market, we went up hundreds of percentage points to the all-time highs that we saw in 2021.
Is crypto dead?
No, crypto's not dead. Now, a lot of projects will go under. I think that, again, funding for projects is going to dry up. I think that people are going to become much more selective in a bear market right now in what they invest in. But ultimately, I still think Ethereum survives. I think Bitcoin survives. And I'm sure there's a handful of other coins that have major use cases that will survive. So I think that, again, one of the things, and we saw this in 2018 and 19 after the 2017 big bull run, is that everyone was saying, when it was trading, when Bitcoin went back to 3,500, oh, Bitcoin's done, crypto's over. That's actually what I look for to tell me that we're getting close to a bottom. It's not a bottom yet. I want to be very cautious on that. I still think Bitcoin's going down further, but like I said earlier, this is the beginning of the last flush. I think, again, flush down to 10, maybe 9, and then I think there you start to put in a bottom.
What would you look for then out of this sector? And I want to speak just briefly on this before we head into Bitcoin and move on. So there's this flush out. What fundamentals do you think these types of projects need to demonstrate before they should be considered legitimate?
So I think that's twofold, right? So number one, we have to know what's a security and what's a commodity. And Bitcoin, basically, we know is a commodity. So that's a different case. But I think before you can figure out the fundamentals, we need to know what type of reporting they have to do, what type of auditing they have to do. We need to know more about them. But like for something like Ethereum or even something like Cardano, maybe Polkadot, there's a lot of layers of things built on top of them. So there is intrinsic value there. There is a fundamental use case, and they are being used for certain things. It's just we don't really know to the extent. We don't have any numbers. Like when Apple reports earnings, we know exactly how much revenue, what is their earnings, what are their guidance. You get some sort of sense about what the company is valued at, or at least you can value it. And we don't really have that in crypto yet. So I'd like to see more of that, where we can actually gauge these projects and what their real value is. But for me, for Bitcoin, it's saying, okay, well, I still believe that even though the Fed will be reluctant to print money for years, eventually we'll get in such a bad recession or depression, they're going to be forced to. And therefore, fiat currency, again, is going to be diluted more and more and more. And you're going to need something like Bitcoin. Gold is great, and I'm a huge gold fan. But I also think you want a digitalized gold where you can buy and sell it very, very quickly, versus if you buy, I mean, yes, you can buy an ETF that tracks gold. You can buy the gold futures. But if you hold gold, it's not that easy to sell it and buy it versus Bitcoin, which gives you a little bit more freedom. So that's kind of the line I'm on right now in terms of fundamentally, I think absolutely Bitcoin has a case. Ethereum has a ton of things built on it. Those definitely will survive. And I think the value comes in on this flush.
What are your thoughts on Sam Bankman-Fried, the person?
So, I mean, that's such an interesting kind of aspect because, to be honest, I don't know enough about him to pass judgment. I think that, the question is, did he know what he was doing was seriously wrong? Or was he in this position to where he thought he was invincible and he would just be able to maneuver these assets and get out? And then obviously during a bear market, kind of the issues show up and it creates the catastrophic collapse. So again, it's really tough to see, but I think the bottom line is anyone that's a custodian for billions and billions of dollars needs to build their team correctly around them, where they actually know the legalities of it, they know the rules, they know what they need to do, and it doesn't seem like he was doing that. And I think that's the major issue. So he needs to be held accountable. There's no doubt about it. He 100% needs to be held accountable.
He's guilty of fraud, in my view, it seems,
Yeah.
from the outside. I mean,
It's
not even.
certainly, yes. If he was misappropriating funds, then there absolutely has to be repercussions for that. And again, I'm sure that the attorney general is looking into that. And I'm sure, listen, if there's one thing I know is that the government wants to make a case against the crypto industry to kind of make it like the poster child for don't do this again. So I fully believe that there will be repercussions here. My guess is the district attorney is just building that case. They want it to be a dead-on case before they start, taking it to the next level.
What are your thoughts on Coinbase and the rest of the sort of US-based, I guess, infrastructure, if you will, in the wake of FTX?
Yeah, so I mean that's the question, right? So the question is, if you leave money on an exchange, what exchange is the exchange you want to leave it on? I would generally, and I'll tell you this, I have money on Coinbase. Another one is Kraken. Kraken supposedly gets audited 2 times a year. Coinbase is a publicly traded company, so you would assume that they're held to a higher standard because of the SEC's involvement. So, it's very risky right now to be having money on an exchange, but I will admit that I do have money on Coinbase, and I feel a little bit safer by doing that because they are a publicly traded company under the umbrella of the SEC.
And we've seen Brian Armstrong doing a lot of cleanup in recent weeks. He often doesn't wear a suit, for instance, rather a black shirt, I believe, and he's been on mainstream press dressed up in a suit, the nice red tie, doing the rounds. Kraken has been run historically by Jesse Powell, the founder. He recently bowed down in the recent months. He has somewhat of a reputation of like maybe almost a Bitcoin maximalist with a little like degen side to him, but that's now in the hands of probably, I would say, a more traditional CEO, although I don't know. I'm sure that it was somebody that Jesse knows well and approved of. In addition, both US-based companies, Kraken in Wyoming, which is, I think, an increasingly important state currently in the blockchain sphere. I think we should be looking to Wyoming here and see what they've been doing at works and trying to bring that perhaps to the federal level, or at least ensure that the crypto regulations which are implemented are not too draconian. And I
Yeah.
think that's something that the entire industry right now, that includes Bitcoiners. I oftentimes kind of like split Bitcoin off from the rest of the crypto space. But right now, when it comes to regulation, I think although we do know that Bitcoin is a commodity, there is a lot of scrutiny right now on crypto, and Bitcoin is not exactly loved by a lot of, I think, I guess, um, people who have been around power centers for decades in many
Yeah.
cases. So it's definitely an interesting time for that entire space. Bitcoin has been dragged down. You mentioned earlier you do see Bitcoin going down further a little bit. How far do you think Bitcoin could go down price wise?
Yeah, so for me, it's really looking more and more. So there's going to be major support around 12 to 13,000, but I do think it even breaks that and probably gets to about 9,000. I'll show my chart here to give us all kind of a basis of the thought process here. So number one, with Bitcoin, if we look at the comparisons between Lehman Brothers collapse and FTX, there was about 5 to 6 months where it took for it to bottom. The stock market, the S&P, dropped about 45% further once after Lehman Brothers announced. And so by doing that math, it comes out to be about $9,000 where Bitcoin would bottom. And that would be a bottom in around May of 2023. And then the other interesting thing is if you zoom out on the chart, if you look at a trend line going back to the before the 2017 bull run, the lows of the bear market in 2018, the lows of COVID here in 2020, there's a trend line that comes here. There's a downsloping one from this pivot to this pivot, and they both kind of coordinate right underneath $9,000. So for me, that's kind of giving me, you have the fundamental side of mirroring the Lehman Brothers collapse, and then you also have the technical trend lines of returning to kind of these scenes of the crime where these kind of the Bitcoin chart really bottomed out and began to move up. So to me, it makes sense that you're looking at about a $9,000 target before all is said and done. And I think, by the way, I think one of the cool things about that is that it's really not that far away. Percentage wise, yes, it's a decent percentage drop from here. But I mean, when you think about Bitcoin at 69,000 to 16, and now you're talking about 16 to 9. I mean, it's literally like comparatively that tiny of a move. So as a bull long term on crypto and on Bitcoin, I'm excited. I'm like, okay, now we're getting close to the bottom, hopefully.
What could derail that?
Mm.
We are, of course, like I guess in probably a statistical recession based on especially the way that it used to be accounted for, which I guess was like quarters of negative GDP, I believe, which what used to be covered by newspapers and the television stations that were kind of covering this for people. And here we are kind of in a sort of what would you call it? A recession, but not a recession.
Right.
What
Right.
what does that mean for Bitcoin specifically? And then let's talk about that generally.
Yeah, so for me, it's kind of a weird scenario because we're so used to Bitcoin going down when the stock market goes down. And during a recession, if things are going to get worse, like I think, then the stock market is going to continue to go down because earnings are going to suffer. So in terms of valuation, stocks need to adjust down. What I'm thinking is that once we get transparency and regulation in the crypto space, you're likely going to see this pivot where Bitcoin becomes much more gold-like. And what we know about gold is that when there's uncertainty in the economy, when things get scary, people love to go to gold as a safe haven. So I'm guessing that Bitcoin will have that pivot in 2023 where it actually starts to do better. Even when the stock market drops, you might see buyers, institutional buyers, going to the safe haven of Bitcoin. Now, we still have a long way to go to get there because you need regulation, you need transparency, you need trust. But I do think that that will probably happen in 2023.
And what does that mean for the broader economy?
Yeah, so the broader economy, I think, is in a lot of trouble. I mean, if you look at the Fed funds rate, which basically less than a year ago was at 0.25%, quarter basis point, and then we've gone to 4% in such a short time frame. That is an epically big shock to the global economy as well as the domestic economy. And I do not think that, a small recession is all we're going to get here. I think that this is going to be a tidal wave. I still think you have people spending on credit cards that they paid down during COVID. They saved money, all these things. They wanted to go out and travel. So it was very stimulative. So we've kind of stayed out of that recession-ish type thing. But I think that you're going to hit a wall very soon, and you're going to see this very nasty recession come in. And the problem is the Fed cannot print money now, right? Inflation's what, 7% right now, 7.5, whatever it is. I think 7.7 was the last CPI reading. I mean, even at 5%, the Fed still can't print us out of a recession because it would then shoot inflation much, much higher. So you have this really tricky scenario where I think we could be mired in a recession that lasts for years.
What does that mean for people? Because I guess the last time that happened would have been 2008, 2009. A lot of people might not have memories of that. So what might it look like in a recession in 2023, 4, 5? We also are post-pandemic, and I think there was novel experiments done, especially on the economic front, then like lockdown. So basically we had a bunch of like small businesses that are going out of business. Look at California. There's like 50% of those businesses, restaurants are closed, et cetera. So in that context, what does a recession look like? So there's kind of a two-parter, like for what might we generally expect from a recession? And will this recession be particularly harsh due to all of the small businesses that apparently are out of business?
Yeah. So one of the things that I've learned, and I've been trading since the late 90s, is that, first of all, the Fed has been involved in every bubble that's been created, whether it was the dot-com bubble, whether it was the financial crisis where real estate just got crazy, and then you had all these derivatives, and then all that blew up. And then basically what we saw in 2008, 2009 was it was only about a year and a half to 2-year recession. And then the economy was ripped out of it because the Fed started quantitative easing, right? So that's one of the keys, is to keep in mind that every recession we've had now for decades almost, the Fed has printed us out because inflation has been low since the 80s. Well, the question then is how long could this recession be if the Fed isn't able to print us out? And I would argue that you could be in a 5 to 10 year kind of recessionary environment where you don't see new all-time highs in the stock market for 10 years. What is it going to look like for the average person? I mean, unemployment's going to go up probably north of 10%. Again, comparatively, that's a major move up in unemployment. I think you're going to see a lot of companies that have been able to borrow money to stay afloat, because again, borrowing costs were so little that they could just borrow another $1 million, $5 million, $10 million to keep the businesses running. They're not going to be able to do that. So you're going to see a lot of bankruptcies going in. There's going to be a lot of stress in the system, corporate debt, a lot of issues there. So I think there's a chain reaction that's going to get set off. And then the question is, how bad does it get before the Fed does come to the rescue? Because like, if you think about it, if let's say inflation's at 4% and unemployment's at 4%, well, the Fed's not going to print money. But what if you had inflation at 4%, but unemployment at 20%? You can't tell me the Fed's going to sit by and not print us out if it got that high. So it's all about the severity of it, which is then going to cause the Fed to eventually come to the rescue, which I think they'll be forced to do. And it just brings me right back to, well, what's the safe investment here? Well, probably gold, metals, and ultimately, eventually Bitcoin. Eventually Bitcoin would be a safe haven as a commodity.
Do you think that overbearing regulation could have a negative impact on kind of Bitcoin and crypto moving forward, if that's perhaps comes to perhaps harshly? For instance, we see yesterday in Forbes, it was written by a senior contributor now, Joe Biden leads a critical call for game-changing global Bitcoin and crypto rules after shock FTX class. What do you think? What do you expect to come from that?
Yeah, that's a really good question. So for me, and this is always the tricky thing, is like, will the government overregulate? Well, we know from history, generally they do a little bit. My hope is they don't do it too much, because obviously you don't want to stifle the expansion of cryptocurrency and how good it can be with the blockchain and everything like that. But I think that for the most part, it's kind of a double-edged sword, because without any regulation, no institutional money is going to come into the space. And when I think about it, I'm like, okay, pension funds have trillions of dollars. Institutions have trillions of dollars. If they were just to take, let's say, 3% of their assets and say, okay, we're going to diversify into Bitcoin, Bitcoin's $500,000, maybe $1 million per coin, right? But if they overregulate, does that take a little away? It might. But again, to me, it's like, well, which is the worst, the lesser of the evils? And for me, it's regulation. I would rather have regulation than no regulation, because let's be honest, human nature, unfortunately, we've seen it again with Sam Bankman-Fried. You can't trust without like strict audits. You can't trust. There needs to be audits at least twice a year, maybe quarterly audits of these places, so that we actually know what's on the books and what's being done.
What opportunities do you see moving forward, as of course we're looking at a mountain of debt, falling revenue, surging costs? What opportunities do you see in that environment?
Yeah, so I mean, that's the key, right? Is that, and I'll go on record. I always say this, is that in bear markets you get some of your best opportunities. So, for instance, there were people buying Bitcoin at 65,000. That wasn't a good opportunity. We obviously see that. Bear markets create the best opportunities. You now have Bitcoin trading at 16,000. I think it might even be in the high 15s by now. So I think you're looking at those type of things you want to be involved in. For me, for instance, I'm a big gold bug, as I said. I also am a big fan of foreign markets right now. I think Brazil is an interesting stock market. It's been consolidating for a long period of time. I think that could be a breakout. And I actually think that now that President Xi in China has been reelected, it does look like he might be starting to soften his hard line a little bit, which then could make the Chinese stocks very, very attractive. Now, there's obviously risks in investing in foreign markets for sure, but to me, it's proper allocation, right? Take a little bit of money there, a little bit of money there, and then have a well-diversified portfolio. For me, I'm now mostly avoiding US stocks unless it's for a quicker swing trade.
For you, what is the significance as an investor that Bitcoin's a commodity, whereas essentially, potentially everything, including Ethereum, is a security?
Yeah, so I think the biggest thing there that people have to recognize is that as a security, you have to look at, well, what does Apple have to do? What does Microsoft have to do? So again, you were talking about audits, regular audits. We need to know what are the rules going to be for, because I think in my opinion, Gary Gensler will make a distinction. He's going to say they're securities, but they're not the normal security, right? You don't have the same structure as Apple. So the question is, what kind of reporting will they need to do? But I would say quarterly reporting is what's going to happen for anything that's a security in the crypto space. And that will take money, right? There's going to be a cost associated to these cryptocurrencies for that. But the way I look at it also, it's gonna keep certain projects that maybe shouldn't be public. Like if you look at the space, the crypto space, there are 20,000 cryptocurrencies. There's no reason to have 20,000. Most of them are junk. So it's gonna help cleanse the system of a lot of the junk if you raise that bar for entrance a little bit.
How many do you think there might be left over at the end of the day?
I would think 100 or under. I think that would be the proper amount. And I think, you're going to have ones that are used in the financial industry. You're going to have the Ethereums. You're going to probably have Polkadot, Cardano, some of those that have real good use cases with things built on top of them. But I would say 100 or under when it all is said and done.
As an investor, how important is decentralization to you while like investigating these projects worth?
So for me as an investor, it's not a huge deal. And I know that sounds crazy in the crypto space, but like I want to make money, right? And that's my goal, right? I'm not going to hide that. It's all about, for me, if I'm going to buy Bitcoin here in 5 years, I want Bitcoin at 100K, whatever it may be, and I'm going to make a lot of money that way. So if we get in regulation that makes it less decentralized, but it gets me to 100K on Bitcoin in 5 years or less, I'm probably okay with that. What I wouldn't be okay with is regulation that actually causes a hurt to the prices of these crypto assets.
Give us a year in review for Bitcoin briefly, if you will. What happened in 2022 in Bitcoin?
Yeah, so 2022 saw the end of money printing. I mean, even 2021, but it was late 2021. And basically what you saw is that when you take away the free money from the system, crypto assets had gotten way too high too fast. And so there's this what I've called the deleveraging event, which has lasted the entire 2022 year, which is less money, more fear. And that again causes these reactions with price just continually going lower. So I think really deleveraging is the one term I would use for the crypto space in 2022. I think 2023, the term will be a bottom, bottoming. And then hopefully in 2024, we see a big bull market reemerge.
Now you've mentioned gold and foreign markets and G even in particularly. Let's start with gold. Can you walk us through 2022 in gold and silver, if you will, and then let's ask, now that we are moving into a recession and both these metals did quite well during the last recession, what might we expect in 23, 24, 25, etc.?
Yeah, so I think 2022 was the year of the dollar, the US dollar. The US dollar spiked dramatically. It basically even pushed gold down, even though gold's a safety asset. Gold did end lower, or at least has been lower for the year. But what I love seeing here is this potential breakout where you had this like W bottom, you broke out, now you're retracing. This is now support, and my guess is you're going to start to head higher. So I would guess that gold in 2023 retests the 2000 and change high and potentially breaks out. I think the dollar is likely made a near-term high, maybe even a longer-term high, as the Fed kind of gets to the backstop and stops hiking rates. And I think that gold, again, is going to be probably the best performing. It was the best performing asset in 2022 when you compare it to the S&P and Bitcoin. And I likely think that it very likely will be that best performing asset again in 2023. Silver also had an awesome move, right? So recently, and I'm talking recently, but look at this. Here's a trend line to there, to there. You broke out, and now you've retraced to support. You actually should start to see a move up on silver back to about 25 per ounce on silver here. So I'm bullish on both those metals. I think that, again, the key is what hurt basically the metals in 2022 was the dollar. The dollar was just nonstop up. And because metals are traded in dollars, that obviously took a lot out of them.
Why was that? Why was 2022 the year of the dollar?
Oh, I mean, just because you had this Fed that was on a warpath. I mean, if you think about it, 475 basis point hikes in a row. I mean, I don't even know. I mean, I guess you'd have to go back to the 80s for that kind of stuff, but it was unprecedented price action that we haven't seen in 40 years here in terms of hiking rates, which, remember, when you raise rates, it pulls money out of the system. And so essentially you're restricting the amount of dollars. Therefore, less supply of dollars means the dollar price has to go up to meet the demand. And that's what we had. So it was, I mean, everything this year was about the Fed and trying to push that dollar up, and they succeeded. And it probably did bring down inflation, at least somewhat. The question is, how low does inflation get?
Mike McGlone came on this show and predicted that inflation was going to be at 2%, that we've had a long-term trend of deflation, and there's no reason to expect that long-term trend to be interrupted for too long. In other words, I think while he was surprised at how high inflation went, he did see it as transitory, and actually at the end of the day thinks that we're going to head back down towards 2%, which is the Fed mandate. How low might inflation get, Gareth?
So I eventually could see it moving back towards 2%, but I'm in the camp that inflation will remain elevated for at least a few years. And I think that's going to make it very tough for the Fed to come to the rescue, which is why the recession likely will be a little bit longer. And the thought process here is just based on wages, right? So, oil's come back in. We've had a lot of the industrial metals come back in, but what hasn't come back in is wages. And wages have been elevated significantly. Like someone that was making $15 an hour is now making $25 an hour. And what we have to remember is that businesses can't double like you didn't see a Whopper double overnight in value in price. So what businesses do, what they'll do is they'll raise by 10%, which the consumer can handle, and then next year they'll raise another 10%, maybe another 10%, and they'll raise those costs over a period of time. And so because of wages going up, it's going to take a little bit of time to bring that ultimate, kind of inflationary thing back to 2%. So I would say honestly, I don't expect 2% inflation at least until 2025.
So is it on a downward trajectory now, or do you think it's going to move higher?
No, I think it's on a downward trajectory for sure. Yeah, I do think that we've at least made peak inflation, but I think what you'll see is inflation comes back to like 4%, and then it gets very sticky for a long period of time. And again, because the economy is going to be in recession, the Fed can't raise rates more because obviously it'll make the recession worse, and then it's going to kind of be sticky there for a couple of years.
Sticky.
Yeah.
What does that look like?
Sticky. That just means it's stuck at 4%. And it's not going to be so high that it's going to kill the consumer, right? Because I mean, compared to 9% or 10%, which is what we've seen, it'll seem lower, but it's going to be high enough that the Fed cannot stimulate, which is what everyone, I mean, if unless you're as old as I am, and I'm in my 40s, you don't really remember the pre-Fed stimulus periods, right? I mean, we go back to the 90s. It was, even then you could argue that the Fed was still involved by lowering interest rates and so forth. But quantitative easing started in 2009 and it only ended in late 2021. And a lot of investors have never seen that period without the Fed QE.
So you say sticky, say inflation's at 4%. Could we see a bout of stagflation?
Yes, I do think that is likely. I do think that the economy, again, and this is going to be what's going to be so negative for the global and domestic economy, is that I think you will have that inflation number sticking around 4%, give or take, and you're going to see a recession. So anytime you have inflation and a recession, it's almost like two negatives, right? Because people are losing their jobs or they're not making more money, but prices continue to go up at a clip. And again, that is the worst of all scenarios. And so I do think that we will see a period of stagflation.
And what might that look like, do you think? Who could benefit during a period of stagflation? What opportunities do you see in a stagflation? And what might the man on the street expect? What might Main Street expect?
Yeah, so I think this is where it gets kind of crazy, because during stagflationary times, people really suffer because, again, not only are people losing their jobs in a recession, not getting paid more to compensate for inflation, but you also have prices going up at least somewhat. And so in general, during stagflation periods, oftentimes you'll get the political parties in power. They're going to be the ones that are going to get blamed for it. People get upset at it. I mean, people losing their jobs. We know that during recessions, when unemployment is higher, you usually see kind of a new wave of politicians voted in and so forth. So I do think it poses political instability as well as just instability. Crime usually goes up during those periods, and so it is going to be kind of a tricky period. But again, I think the big thing is, for those of us that invest, we want to invest in things that will offset that. And again, going back to metals, I think metals are key. In general, if you see that inflation bug, you should be looking at gold, maybe some silver as well.
And then after the stagflation, what might it look like? Might we also get perhaps a deflationary episode?
Yeah, I think if I do think that if the global economy and domestic economy suffers enough and we go into a deep enough recession, then you should likely see a scenario where you have prices start to fall. Because, right, if everyone's losing, I mean, if you have unemployment that goes to 20%, people aren't buying luxury goods, for instance. I mean, it's just not happening in that environment. And even just regular goods that, aside from food, I mean, food and energy are the two that you can't really avoid. Yes, people can trade down to kind of a hamburger, from McDonald's versus a steak type thing. But I do think that you see that prices will start to fall if the recession gets bad enough.
Okay, gold. What are you looking at in the gold markets, on the gold charts right now,
Yeah,
etc.?
so for gold, for me, for sure, I love the price action that we just have gone through. You've had a little short-term breakout on gold. We kind of just talked about this before, but here's your trend line, little W bottom. I love how the double bottom held. Twice it tried to break and held. Then you got this bullish move. Now you're consolidating. This is going to be support. I would look at buying 17.25 an ounce on gold and expecting another bull move to the upside. We do get the Fed minutes out this week, so that should be interesting as well. So again, I would look for higher prices in gold into year end and in 2023.
And how about silver?
Yeah, silver, kind of the same thing. I mean, even with silver being an industrial metal, let me just bring up that here. Let's look at silver real quick. Same thing with silver. It had this beautiful bottoming pattern. It broke out of short-term resistance. It's now retraced. I would expect another move up, and I think $25 per ounce on silver is likely where we're going.
Okay, so we're looking at Elon Musk has had a big year, obviously, with Twitter. He purchased Twitter. He had said originally he might take it private. I believe that's in process now. Now, Tesla is down 55% for the year. What are your thoughts on Tesla?
Yeah, so Tesla, it broke a very key support level and it has been trading lower. Let me show you guys this one. So this support line, you can see how it hit here, here, and here. Then it bounced and then it broke right here. So Tesla, to me, you will have a short-term bounce around 166 to 165, but then it's headed likely down to about 137 before it makes a major support level. So I think again, right now we're getting close to a short-term bounce in Tesla, but I still think it's got more downside after that to go. I think again, with Elon Musk buying Twitter and he's, now he's tweeting like 10 times a day at least. It would concern me if I was a Tesla shareholder. I'd be concerned that his focus is now getting taken away from Tesla and growing that company. He now has he had a lot before on his plate, rocket ships and Tesla and this and that. Now he's got Twitter to deal with and he just paid $44 billion for it. So he has incentive to really focus on Twitter and get that working right. So again, I think it takes his focus away, which is never a good thing if you're a Tesla investor.
Are there any car competitors you think might take over the EV market?
Yeah, I don't know about taking over completely, but I think there's no doubt that, Ford has said that they're going to basically have all EVs by 2030. Every car company is moving in that direction. So they will bring their game up to Tesla's level. We've seen that in every scenario with every new kind of technology, is that everyone eventually brings it up to that level. And that does pose a risk for Tesla. I think they have to continue on this autopilot, this self-driving avenue, because they have to keep themselves distinguished from the rest of the car companies. They need to be a leader, not kind of within the pack.
Now, Amazon is having some PR problems, I guess you could say. Often I see it in the news. It seems that people don't love Amazon as much as they used to. I see this headline at Drudge: Amazon has problem consumers don't love as much as used to. What are your thoughts on Amazon stock?
Yeah, so Amazon, we know it's fallen precipitously. The chart again is down from basically $190 to 92. So you're basically down 50%. The one thing you can see is there's this sideways chop from 2018, 2019. That is where we are currently holding. So right now you are at support, but I do think that as we dip further into a recession in 2023, I would expect Amazon to take a hit, right? If people are feeling the crunch, they're going to be buying less on Amazon and just less overall. The consumer is going to get hurt. So I fully expect Amazon to maybe trade. I know this sounds crazy, but I wouldn't be shocked to see Amazon in 2023 or 2024 down to $50 a share. There's a major support there around gap fill. It wouldn't shock me to see it go down in that range.
And Microsoft is pushing to expand. What do you see for the Microsoft stock in recession, or if it looks like they're able to merge with some companies as they're putting pressure on the government to do?
Yeah, so for me, Microsoft, it's had a big pullback just like everything else. I do see a short-term bull flag on Microsoft. So, you might get a pop into the holidays here. You can see this little consolidation right here. But ultimately, I would be shocked if the stock doesn't trade lower. There's this pivot from just before the COVID collapse, which is around 187 to 188. I'm kind of, focusing in that might be where this thing is headed in 2023. And again, I think the bottom line is that if we eventually see, and again, it's important to recognize that the Fed hiked interest rates 75 basis points 4 times. They're likely in December going to hike another 50 or 25. It takes 6 to 9 months for an interest rate hike to filter into the economy, which means we haven't even felt probably 3 of the 4 75 hikes. And so you have to think that that's going to continue to slow the economy, push us into recession. And then, it doesn't matter which publicly traded company you are, Apple, Amazon, Microsoft, you're going to see a slowdown in consumer spending, and that's going to hurt the bottom line.
The Fed. What rating do you give the Fed on their efforts to bring down inflation?
Well, to bring it down, I give them high marks. Like they have gone balls to the wall, excuse my language. But do I think that they were overcompensating for being wrong on transitory and trying to make up for it by going too fast the other way. Yeah, I mean, the Fed again has a history of overdoing it on each direction, and I think that's what they've done here. Two rights don't make a wrong, right? And vice versa. So, when you miss it on one side, you can't go the total opposite way, gangbusters, and do it the other way. Otherwise, you're now going to push the economy into a bad recession. So I think when all is said and done, the Fed is going to get a lot of blame for the coming recession and hiking rates too high. And I think that is going to be, I mean, honestly, I think the Fed eventually is no longer in existence in its current form.
I think there's going to be a lot of bankruptcies through this period. I think that we're going to see mom and pop retail really still hurt on the back of the shutdowns. I think that there's a risk that they could even be shut down, or people could be discouraged from going out in big cities again. It'll be much different dynamics going on depending on where you are throughout this recession. I think it'll be interesting to see what happens in Texas. What are your thoughts on Texas? Now, we've become basically like an oil exporter after being an importer for so long. There was I guess Biden administration at first shut down the oil producers, and then they had to open them back up as the gas prices increased nationwide. I mean, there's a lot of good happening in Texas, the oil production being one of them. Do you have any brief thoughts on that?
Yeah, no, I mean, Texas definitely, I think what's amazing about Texas is that it not only has the oil side of things, but it's actually becoming a tech hub, right? We know that Tesla moved, it's a location there to Texas now. I've heard more and more of tech companies starting to open branches in Texas. So I think it's a great thing. I mean, I think the tax side of things is very lucrative to businesses as well. And it does seem like Texas is a pretty cool spot now, no doubt about it.
I'm looking here, we see that the Permian Basin in Texas is driving the U.S. oil industry despite limits placed on its growth. We're producing almost, I guess, maybe almost as much as OPEC, I think, if I'm not mistaken, based on what I've heard.
Yeah, isn't that amazing, man?
I think that's great. So it'll be interesting to see what we're looking at through these next few years here on the recession front. Now, so in the Ukraine. Now, what we recently had was we had reports that there was a Russian missile that landed in NATO territory in Poland, and then that was reversed to essentially the exact opposite story, which is that it was a Ukraine missile that had landed there, which I think is a much better story heading into the long winter coming out of that region than would if it had been a Russian missile. Now, 2 people died, so first and foremost, that's a tragedy, and I think that's sad. It's very sad. Yeah. However, it's much better that instead of having a world war over it, we aren't going to. What are your thoughts heading into the winter on Ukraine? What might it mean for for energy prices and the global economy?
Yeah, so I mean, again, I think that the price of natural gas, at least here in the US, we've seen it come down precipitously. So at least that's a good sign where potentially it's a little less expensive over there. To me, though, it's still going to be a tough winter, I'm sure, especially with Russia continually to try to, they're continually bombing the infrastructure there in Ukraine. So I think it's going to be a rough winter in Ukraine for sure. The rest of Europe, I'm sure, will suffer as well. But for me, I don't see a specific trade that it gives me. Like for one thing that I've always learned is you don't kind of think like, oh, well, I should buy natural gas because of the winter coming, because smart money already is in that trade. And if anything, they'll be unloading as I'm buying, right? So I always want to be at the cutting edge of the trade. And so when everyone else talks about something, I'm like, too late for me. I want to find something that no one else is talking about to take the trade there. So for the most part, I think that, again, it's a horrendous situation with people freezing during the winter, and the winters can be brutal in parts of Europe, but there's no trade for me at this time.
But 2 examples might be on the foreign markets with Brazil and Xi winning a 3rd term, which is uncommon, and perhaps maybe you're suggesting opening up those markets, I guess. But can you please tell us what you're seeing on the foreign markets as an opportunity that others haven't?
So that's the beauty of it. That's what no one's looking at right now, right? So for the most part, all I've heard is negatives on China, right? Negative, negative, negative. It's too risky. So when I hear that, I'm like, okay, well, let's look at this as a use case. Well, China's economy is in a bad position. Their inflation is lower than ours because generally we didn't see the same type of inflation in rice. They're a big consumer of rice. So they have the ability to stimulate more for their economy. We know what happened in the US when we had the financial crisis, which was real estate, and that collapsed, and the Fed printed our way out of that. Well, now you have this real estate collapse going on in China as well. And the question is, if they're in a tough economic scenario, you would think that the government would not want to hamper economic recovery. Remember, the way governments, especially kind of dictatorships, stay in power is they need to keep the people happy. Right. So there's a lot of things that kind of make sense to me. Now, by no means is it something where I put all my money. It's just a small allocation. But for me, when everyone else is kind of hating on something, it does make sense. And then on the EWZ, which is the Brazilian ETF, which tracks the Brazilian market, I just absolutely love this chart, right? It's really a remarkable chart. If you go back to the lows of 2002, you had this epic bull run in the Brazilian stock market to 2008. And look at that run. And then since then, look at this. Nothing but consolidation. You haven't made a new all-time high. You haven't even come close. Well, for me, I start saying, okay, this is a wedge pattern, and eventually it likely will break out. And when it breaks out, this could be a monster mover to the upside, right? Eventually, the idea is the Brazilian market maybe even retest its all-time highs, even though it's now been 15 years or more since we made that top. So for me, these are the types of charts I want to look at where everyone else doesn't look at them. It's kind of, you want to be the first one, but then form your thesis and see if it holds up.
Yeah, interesting thesis. So like it's really important to have a good historical perspective. And as you mentioned, 2002, Brazil, a run up in the economy. I think back to Lula, who just recently won an election. And although at first there was a bit of market hysteria, he ultimately appointed somebody, a moderate, I believe a fiscal moderate, a fiscal conservative to the central bank there, which gave the market confidence in Brazil. And he actually oversaw a boom. He even, I think, paid down his IMF debts during there. And I read this after he was just recently elected in Brazil. And any thoughts on that context where Lula did oversee a very strong economy leading into the recession? And during the recession, they were a BRIC country.
Yeah, so I think that's absolutely part of it. I think that Brazil is one of these economies that's emerging again, and I think it's great to see someone like him appoint a conservative, which will be fiscally responsible, because I think that's what the market was initially worried about when he was reelected here, is that it was going to be more like just printing nonstop and inflation and everything like that. So I think that's a very, very big positive as well. And again, the chart hasn't broken out yet, but it's on my watch list as a potential breakout.
Well, we'll be watching it here too.
Thanks.
Gareth, can you tell people about the services that you offer?
Yes, absolutely. So I have a service called Verified Investing Alerts at inthemoneystocks.com. And basically what I do is every day I do a video going into detail, the charts, the technicals, oil, stocks, the S&P, the NASDAQ, everything we go into technically. And I also put out trade signals. So if I see a high percentage trade signal, I put it out. The other service is verifiedinvestingcrypto.com. And that's the same sort of service, same structure, but for cryptocurrencies, trade signals. And then lastly, I would just mention everything I've learned, right? And I'm getting towards the later portion of my career now, is these technical signals. I've come up with new signals that work amazingly well that let me kind of project out. And basically I put it all in video format. It's called the Winning Trader series, and it's at verifiedinvestingeducation.com. And I hope people check it out. I think, in fact, we're running a special Black Friday sale this week where it's half price. So check it out for sure. It's life-changing. Like literally everyone that's taken it is like, dude, this is amazing stuff. And it's everything I've ever learned in here in video format.
You did touch on it. I do want to maybe drag it out a little bit more. Why should people sign up for this? Why should people purchase your service?
Product? Well, basically, it's like it's you come in and in the three videos, right? There's three of them, and there's it's total of 20 hours, right? So it's a ton of content, and it goes through personal discipline, how to make yourself a disciplined trader where you don't get suckered into getting in late on trades where you're disciplined, you know your game plan, how do you work on your game plan. Then we go into market psychology, which is so important in understanding why things are occurring and keeping you away from that. When everyone on Twitter is telling you to buy Bitcoin at 69,000, how do you separate yourself and say, wait a minute, I'm seeing topping signals here? And then the last course is all about the technicals, topping tails, bottoming tails, the confirmation signal, everything I use on a daily basis to pick out winners and make money. It's all in there. So it's basically everything I've learned for 20 years. It's kind of my legacy, if you will.
Gareth, you're young. You're very young, man. We've had the honor and privilege of sitting down today with, you're saying you're at the end of your career, and you very well might be. That's awesome. That's great. You got so much time ahead of you.
Yeah.
I'm sure some people heard that and they're like,
I'm not going away. Yeah. And just be clear, it's not like I'm riding off into the sunset now, but it's, I've been doing this now for 20 years, and there will be a point where I start paring back what I do. And I'm like, it's crazy how busy I am on a daily basis. So there will be a point where it pares back, which is a healthy thing to do.
that's why you got to go now. There's going to be a sale for Black Friday, I believe, to Gareth Soloway. His domains at verifiedinvestingcrypto.com and themoneystocks.com. He's on Twitter at Gareth Soloway. Check him out today. Thank you so much, Gareth, for joining us.
Thank you so much, buddy. I appreciate it.
And thank you, everyone, for listening.